Cryptocurrencies are highly volatile and hence risky investments. Experts highlight three main risks of investing in crypto: making bad investments in obscure coins, getting into crypto projects that failed, and falling for a scam. The number of scams has gone up as scammers cash in on the hype over cryptocurrencies. Since October 2020, nearly 7,000 people in the US have reported losses of more than $80 million from crypto scams, according to the US Federal Trade Commission. Compared to the same period a year ago, the FTC said that's about 12 times the number of reports and nearly 1,000% more in reported losses. Here in Singapore, the police received 533 reports of crypto-related cheating, fraud, or other crime between 2018 and 2020. Investors lost around 29 million Sing dollars. One of the victims, an investor who wishes to be known as Andy.
It was in 2018, it was an initial coin offering. So I was offered by someone who I thought was a friend to invest in certain coins.
At what point did you realize something was not right, something was wrong, something was amiss?
When I transferred a sizable amount of Ethereums to his wallet, yes, I did receive the amount of tokens of the project. But these tokens, upon an initial coin offering, which means it starts trading on an exchange, it became worthless in very fast speed.
Andy's losses amounted to over $35,000, or around 20% of his net worth. Other investors have reported losing most of their savings, like Miss Go, who lost about $30,000 on an online cryptocurrency trading platform.
I felt that it was a pretty good investment at the time because it was quite stable and it looked like it was compared to a bank. The interest is slightly better, but it was not like hugely better than a bank. But at least there was a chance of appreciation of the cryptocurrency itself.
When do you realize that there's something wrong?
Actually, it was only around near Chinese New Year when everyone was like selling their tokens to, buy stuff for Chinese New Year. So when everyone was like cashing out, I guess that is the time when problems started, because there were quite a number of big cash outs.
With the recent surge in the value of cryptocurrencies, industry experts say it's even more important that investors are aware of risks.
Everybody has been bombarded about how there's a crypto billionaire, somebody who bought this coin suddenly made millions. That's one. So a lot of scammers are using that to obviously play on the greed of investors. And second is actually the unregulated nature of crypto.
The methods scammers use are not new.
The first is a Ponzi or a pyramid scheme, and that's basically when, let's say the scammer goes to you and says, oh, if you, I invest for you $100, I will make you, let's say 100%. Then I go to the other person and I say, I will make you, 100%. So this person gives me money and then I pay you back so that you have the illusion that actually your investment made money. The second type is pump and dump, where these scammers basically either create some noise or they buy the coin to sort of push the price up. And then, when investors start buying, then they start dumping the coin itself.
Scammers are slowly evolving their tactics too. Industry observers say they're using a legitimate person's bank account to get around KYC, or Know Your Customer compliance checks.
So what they do is that they will cheat other people money and transfer all the money to your bank account. After that, use your bank account to fund the exchange and buy cryptocurrency. Then move away the cryptocurrency in a way.
Tokenized Exchange has stepped up surveillance on its platform. As a safeguard to protect customers' cryptocurrencies, the platform stores them online in warm wallets and offline in cold wallets.
When we talk about cold wallet, the whole architecture is trying to prevent your valuable private key of your cryptocurrency to be connected to the internet. So there is an air gap measure, right? And the warm wallet, we're talking about exchange, right? Some part of the exchange, definitely, we need to let our user withdraw instant and a real-time manner.
Tokenize puts the majority of the digital assets in the cold wallet. And as for the digital assets in the warm wallet, the platform has digital assets insurance coverage as a safeguard. Exchanges which offer the trading of cryptocurrencies are regulated as digital payment token service providers under the Payment Services Act. These entities are regulated primarily for money laundering and terrorism financing risks. But the Act gives MAS the scope to impose additional measures as needed.
The evolution will be so fast that they need to be nimble to address some of these potentially new players and what might be some of the issues that come out with the rapid evolution of this.
ADDX graduated from the MAS's regulatory sandbox as a fully regulated blockchain-based capital markets platform in February last year. Like any traditional securities exchange, the platform is regulated under the Securities and Futures Act.
At ADDX, we don't trade crypto directly, but however, our license allows us to offer and to trade crypto funds. What we would look for are fund managers who are licensed in a proper jurisdiction like Singapore or Switzerland and where they have a good fund management business and have a track record of managing crypto.
Now that they understand more about cryptocurrencies and the risks involved, and armed with a real-life experience from their failed crypto investments, Andy and Ms. Go are not giving up on cryptocurrencies. They have some words of advice for prospective investors.
Do proper research, do your own due diligence, learn about what you are buying, learn how to use the exchange because different exchanges have different fees.
Don't see it as a get-rich-quick scheme. The second thing is when people approach you for investment opportunities and sometimes it sounds too good to be true, always check the MAS website, for example, to see if they are on the investor alert list or if they are MAS licensed.